VanEck is one of the world's leading ETF providers, giving you unparalleled access to intelligent investment ideas. Find out more at vaneck.com.au.
Hello and welcome to the second event in our Visionaries and Innovators speaker series. I'm Vanessa Marks from VanEck and I'll be your host for today. So before we begin, just a quick note. What we talk about today is general in nature and is not personal advice. We always recommend speaking to a financial advisor to determine what investments are best suited to your needs. And any funds that we mentioned today are issued by VanEck Investments, and more information, including the PDSs, can be found on our website. Now, if you do have any questions today, please feel free to send them through the chat function on the left-hand side of your screen, and we will try and get through as many of them at the end as possible. So, we've put together this series to delve into the minds of today's leaders and luminaries and delve into the mechanics of some of Australia's most successful listed companies. We want to know what the qualities, the attributes and the strategies that have acted as the foundation for all of this success, and what are the plans for the future, and what should investors know. Today we are going to be talking to a gold mining entrepreneur. VanEck has a deep history of heritage, a deep global heritage rather, in investing in gold equities, stretching more than 6 decades. We're one of the largest investors worldwide and manage the largest gold equities fund, the VanEck Vectors Gold Miners ETF, which was the first of its kind to launch in the US and in Australia. So those who are familiar with our Gold Miners ETF and the gold sector would need no introduction to our guest, nor the impact he has made on the industry. For those newer to this space, our guest moved from being an auditor at Macquarie Bank to leading one of Australia's biggest investment successes in China. He co-founded a mining company that listed on ASX with a market cap of $100 million. 7 years later, that company would sell for $2.2 billion. He is now at the helm of one of Australia's largest gold miners and one of the most successful mining companies to emerge in the last decade. I am delighted to introduce founder and executive chairman of Evolution Mining, Klein. Hello.
Morning, Vanessa.
How are you?
Very good.
Thank you so much for joining us. So today we have lots of questions for you. We want to know about your management style, about Evolution Mining and what's been happening. So you have a unique origin story. You've been called affectionately the accidental gold miner. Can you tell us, how does one go from being in an office at Macquarie Bank, I imagine having a good time, to stepping out, starting a gold mining business in China?
A lot of luck and a lot of serendipity would be the first answer. So as you said in the intro, the very kind intro, that I came here. I actually came to Australia in 1991. At the time when the world was suffering from its last very deep recession, and Australia was in its last deep recession at the time. I was a backpacker with my wife. We ran out of money in Australia. Fortunately, my sister was here, and we camped out at her place. Tried to get a job. The only job which I could get was in internal audit at Macquarie Bank. Little did I know that I was joining one of the most progressive and growth-oriented companies in Australia. At the time, the Macquarie share price was $3.50. I don't need to remind people that it's now $150. But I was so fortunate to join a company that embraced giving people opportunity. So I spent a couple of years in internal audit, then went to the bullion and commodities division, and happened to be at the desk at a time when someone invited us to China. And we spent 2 weeks in China. This was in 1993. Going to very, very remote parts of China and not knowing anything about China or mining at the time. I'm an accountant. But arriving after 2 days of travel to this small little tunnel which had a gold deposit there with a couple of Australian mining engineers. And I was exposed for the first time to see that Australian mining spirit and entrepreneurship. When I said, do you think we can build a mine there? And they said, sure. So off we went, and 15 years later we built 3 gold mines in China. We were the largest foreign gold producer in China. And then we sold. It was a great call by our Chinese colleagues that China was getting more difficult for foreigners, and it was. This was 2009. I happened to be walking down Pitt Street a few weeks later. I was meant to take 6 months off. Got a call across the road from a stockbroker who said, hey, I want you to have a look at this company. It was Conquest Mining, which had an asset and some money. The asset couldn't be developed because it had a failed feasibility study, but the answer lay in getting an offtake to China, which we knew something about by that time. And one thing led to another, and we took over Conquest. 18 months later, formed Evolution, and Evolution's almost 10 years old now.
That's quite a story. You've obviously run a lot of different sort of teams and companies within that sort of evolution.
Yeah.
What do you think is the most important thing when it comes to making a successful business? For those people watching who are new to launching a business or are trying to grow a new business, what do you think is the most important thing?
To me, it's around strategy. Do you have something that's distinctive? And do you have something that is unique? And if you do, then get the right people into those roles and make sure you really have the best people for that and get the culture right. And if you get those three things right, you're going to have a great business.
Speaking of culture, you obviously spent a lot of time in China. I imagine you learned a lot of things that were unexpected. What are some of the learnings, the lessons that you learn, and how is it different managing a gold mine in China compared to, say, Australia or Canada?
Extremely different. And not only did I learn a lot of things, I ate a lot of different things as well. So I first started going to China in the 90s when you're flying around in Russian jets or aeroplanes. Airports were old. The most popular car was the blue trucks that were around. And it was just an incredible experience to be involved in a changing China. But, cross-cultural differences were huge. Language issues were massive. So it took us time to develop a culture within our organization that embraced that change. And ultimately, we found incredibly good and professional Chinese people who had trained and worked in Australia or Canada and were happy to go back to China. And they really led our cultural journey in China. Australia, of course, is very different. It's much more transparent. The rule of law can be relied on, which is so important. I lost a lot of sleep worrying about whether we actually own the assets in China. Australia is God's gift to miners. It is a great place to mine. It is a huge country, underpopulated, and very mineral rich. And I'd say the same about Canada.
Speaking of sort of Australia and China, we had a China investment symposium recently, and we had a former Australian ambassador to China. We talked about Australia-China relations being at its lowest point ever. Interested to hear your thoughts on this and how that has and will impact kind of gold mining.
Yeah, no doubt that the relationship with China is probably the most important foreign policy issue that Australia needs to deal with. China has changed. I was fortunate to be involved in China at a time when it was opening. Globalization was the theme. They were joining the WTO. And it has shifted. Under its new presidents, China is becoming more assertive. It is producing product which is competitive with Australian and US technology. So I think Huawei produces the second most popular mobile phone in the world today, more than Apple. So it's producing a different product. It is more assertive. It's more confident. And it is leading to friction with the relationship. So I think there are headwinds. And ultimately, China is going to lead Australia to a path where it knows that it needs to buy raw materials from Australia at this point in time. But it is also looking actively for alternative sources. And it's been doing that for the last 25 years.
I want to talk a bit more about evolution mining and culture. So one of the key themes for this series that we like talking to people who are doing things a bit differently, not just for the sake of it, doing things differently because they've seen the status quo, they've seen the standard process and thought, actually, there's a better way. And I feel like evolution very much sits in that space. Compared to your peers, what is your approach? What makes evolution mining unique?
So I think we took a different road from our peers. The gold industry, and I've been a keen student of the gold industry for the last 25 years now, tends to focus a lot on volume growth and top line growth. We said we actually don't really believe in that. We believe that the best path to shareholder value creation is by being a mid-tier, which means that you're small enough to where exploration and discovery can really make a big difference, but you're large enough to fund your own growth without always needing to rely on capital markets for new equity raisings. And that's the space where we think 6 to 8 assets is the right number. We think that the bottom line growth, earnings per share, cash flow per share, resources and reserves per share are the most measurable drivers for value creation. And if you're a small enough company with only 6 to 8 assets, it doesn't mean you always have the same 6 to 8 assets. We always look through the lens of how we're going to improve the quality of our portfolio and how do we do that in a way that's accretive to our shareholders. And if we can do that, then you can be small enough where individuals within the company can really feel like they can make a difference. And I think that's really the unique part of Evolution, the culture of the organization where we feel that we want to make every person's career at Evolution a highlight of their career, and that means giving them opportunity.
Talking about people, and we've mentioned culture before, when you take over a new mine, how do you replicate that culture, or do you try and create it? How does that work?
Well, we've become somewhat proficient at that because we've taken over 4 mines in the last 5 years, and we've sold 3 as well. But it's a case of winning people over with a story about what evolution is, what it means for the individual, how they can really be challenged by opportunity in front of them, and how our organisation seeks for individuals to really be given that opportunity. We have an Act Like an Owner program. In the last 6 years, we've given every person in our organisation $1,000 worth of stock each year. So we want people to be owners. We want people to be recognised. We want people to be known by their first name. Anyone in the organisation is able to contact me. A lot do. And it's great.
That is great. I have to say, upon reading up on all the stories and coverage of you, the one word or one descriptive that keeps coming up is unassuming in a very positive way. So I want to talk a little bit about ESG. So I read a survey of some of your peers that was done early last year, asking the question, what are the key trends in the gold mining industry? And the one consistent response was ESG and sustainability. And we see that across the investor spectrum as well. People want to know the companies that they're using and the companies that they're investing in. What is the social impact? What is the environmental impact? What is the ethical impact? So I heard you say that Evolution is ahead of the curve in this spectrum. What does that mean in practical terms?
ESG is a huge issue, and it's a freight train that is gaining momentum. And investors in the Van Eck funds will be increasingly interested in it, and so institutions are more interested in it. And it's definitely become a real focus point, as is appropriate. There's a lot of focus on carbon emissions. But for us, ESG goes further than that. It really is about your social license to operate. Yes, we will be setting some carbon targets, and yes, we do believe that we've got to reduce our carbon emissions, and there are ways we can do that. I think 2/3 of our emissions are in fact Scope 2 emissions, and they can be reduced by going to renewable energy sources. So there is a pathway for miners to reduce their footprint. But it's also more than that. It's about how do you positively impact the community in which we operate, and we are very focused on that. I think one of the ways in which gold miners have kind of lost that social license, particularly in developing countries, is where they haven't focused enough on the community benefit. Obviously for us in a place like Australia, water consumption is massively important, and that's an area that we're focusing on. So we're trying to live by our mantra of we say we do, we deliver, and that means not kind of broadcasting our ESG credentials all the time, but actually doing it on the ground, and I think that's working.
So living what you say.
Yeah, absolutely.
So let's talk big news for Evolution Mining, and probably one of the biggest news stories of the last month or so is the acquisition of another mine in Canada. What does Battle North bring to the Evolution portfolio in terms of your international standing and ranking?
So about 3 years ago, we started looking in Canada. We kicked a lot of tires and did due diligences on it. And as I said earlier, we look at things through the lens of, will it improve the quality of our portfolio? And will it be accretive to our shareholders? Because there's no point in doing it if it's not going to create value for your shareholders. So we thought Canada was very complementary to Australia. It is a vast country. Rule of law can be relied on. It is highly skilled with respect to mining. And we saw opportunity there. So we did start to get on the ground and start looking around. In 2019, Newmont had completed its acquisition of Goldcorp and was looking at shedding some of its non-core assets. And Red Lake was one of those assets, which we thought was a real beachhead opportunity for us into Canada. So we acquired that almost just over 12 months ago. We got it on April Fool's Day. But it has proven to be an outstanding acquisition. It really delivers a lot of the things which we look for in an acquisition. Geological potential, a workforce that is energized, and real opportunity. So having got 12 months into that journey and starting to feel, wow, we can really restore Red Lake to a premier Canadian gold mine again, and that by that we mean 300,000 to 500,000 ounces of production. We've started to look around in the neighbourhood. Battle North owns the tenements alongside us. In fact, some of their ore bodies plunge into our tenements at depth. So it seemed like an obvious thing for us to look at, which we did start doing. We did a detailed due diligence, and they were just at the starting point of commencing the development of their mine. And so it seemed like there was a window to make an offer, which we did, and it was accepted by the board, and it's now subject to shareholders' approval next month.
So as with any high-profile acquisition, the question is often asked, have you overpaid for Battle North? What's your response to that?
My response is that every acquisition we've done, I've always had some shareholders who said, wow, you've overpaid. And then a couple of years later, they've said, gee, that was a good acquisition. So you cannot tell on the day one. What I can say is that it was a hard-fought negotiation. We ended up at a price of $2.65. It was a significant premium on the day of acquisition, but 3 months earlier, Battle North's share price was over $2.15. So it depends when that premium is struck. But I can say confidently that they started at well above $2.65. In fact, brokers had their consensus value between $3 and $5. We started our negotiations at well below $2.65, and we ended up at that with the appropriate amount of tension and stress on both sides.
So stepping back a bit from Evolution Mining and looking at the gold sector generally, and talking about acquisitions and mergers, there's been obviously a mega merger that's finalised this year between Northern Star and Saracen. Do you foresee this trend continuing? Are we going to have more consolidation across the sector?
I do think there are too many gold companies with too many teams and too many deposits which shouldn't really be developed. So there are too many gold companies. Now, whether they should be consolidated or whether those gold companies should just not be funded is a different question. My view is that all assets that are going to make good shareholder returns, risk-weighted shareholder returns, should be developed. Unfortunately, we're in a sector that tends to get obsessed and fall in love with their assets. And shareholders haven't done that brilliantly out of gold mining companies. I think back to when Evolution started, the GDX, or the Australian All Ordinaries Gold Index, is down 12%, and yet the gold price is probably up $1,000. So Evolution looks at things quite differently to other gold companies. We're looking at, can we build a really good business? Can we get the right risk-weighted return on capital? And then if the answer to that is yes, we're all up for consolidation and mergers, but not just for the sake of it.
Okay. So big question, and final question from me. What is in the future for Evolution Mining?
We always pride ourselves on doing something which is different. And so, expect the unexpected, because we're in a cyclical industry. And when you want to buy things is when people are stressed and, in fact, down. And that's when we've done our best acquisitions. When the gold price is high, we should be making super profits, which we are today. The gold price is over $2,200 Australian an ounce, which is a great gold price. When I started my career, the gold price was $150 an ounce. So people lose, yes, it was $2,800, it's $2,300, but $2,300 an ounce is a great price, and we're making great cash flow. But when is the time to be buying things? It's to expect the unexpected.
Good answer. Can I say one follow-up question?
Sure.
Do you think the gold price is going to go up or down? What are your thoughts?
Vanessa, you can never ask a gold miner that, because we have an unconscious bias to always believe the gold price is going up. So my answer to that is yes, long-term the gold price is going up. The US left the gold standard in 1971. Since then, US debt, national debt, has gone up 70 times and the gold price has gone up 50 times. So that long-term trend is up as fiat currencies decline and more money is printed. But in the short term, or over the life of a mine, you're going to get ups and downs in the gold price. So we're building that business that can prosper through the cycle. with a view that the long-term cycle is up, but short-term we need to be prepared and be making appropriate risk-weighted returns on our capital that we're deploying on behalf of shareholders all the time.
Okay. Well, thank you very much for answering all of my questions today, Jake. Much appreciated. So now it brings us to Q&A from you, our audience. If you do have any questions to ask Jake today, please use that chat function on the left-hand side of your screen. And as I mentioned before, we'll try and get through as many as possible. And I saw that some had come through even before we had started today, Jake. So let me just have a look here. A couple of people have asked Bitcoin.
Yep.
Friend or foe?
I think friend. Bitcoin is really representing the same thing that gold represents, a movement away from fiat currencies or paper currencies. So, the gold industry and the gold sector is still 10 times larger than Bitcoin. Bitcoin gets 10 times more news at the moment. We need to get Elon Musk to tweet about gold. It seems to have really elevated the enthusiasm for Bitcoin. But at the end of the day, it's doing the same thing as gold is doing. It's a store of value. The challenge I have with Bitcoin is how are governments going to allow an alternative medium of exchange or currency to be allowed to be used in their countries that could substitute for the currency that they have control over, because that then removes one of the key policy tools which the Reserve Bank of Australia has, or any Reserve Bank has, to manage its currency.
So another question, slightly different topic.
Yeah.
Are you undertaking greenfield or brownfield exploration?
Yeah, we are. So we've put in place a strategy about 3 or 4 years ago on greenfield and brownfield exploration, because the best way a gold miner can create value is by discovering gold. We operate in this strange industry where we produce a product that is not differentiated from our competitors or peers. As soon as we start mining and producing that gold, we're actually depleting the core asset of the company. So you really have to find more gold or give that money back to shareholders and reduce the size of your company. So yeah, we're very active on the exploration front. We spend about, I think, $20 to $25 million on greenfield exploration a year. We have a really interesting project in Western Australia at the moment that looks interesting, but these are long-dated options which take time.
On the same sort of subjects, obviously you're in Australia and you're in Canada. Yeah. Would you consider other parts of the world to own gold mines?
No, we wouldn't. And that's, again, part of our core strategy. We want to be in countries where the rule of law can be relied on. I do see, and this is going back to the China influence, that China is really looking for new areas and places and destinations for raw material supply. So it now lends 20% or owns 20% of all debt to Africa. It's clearly a place where it wants to be and feels that it can own commodity assets in a way that it can't own those assets in places like Australia and Canada. So I see geopolitical risk rising in developing countries, and that's why we're going to stick to places like Canada and Australia. Okay.
Jake, in your opinion, should the RBA be buying and holding more gold?
Well, that's an interesting question. They actually sold all their gold. They probably regret that because they sold it at a much lower price than it is today. Yeah, I do think that this flood of money printing and this fiscal stimulus, the US, I think I read this morning that the Fed's balance sheet has doubled in the last 12 months. It's all these packages and it's appropriate in this COVID environment to have rolled out these stimulus packages, but you're ultimately just printing money. So yeah, if the Reserve Bank wants a store of value that it can't print, gold is that.
We've had a few questions come through going back to what we're talking about with ESG. Mm-hmm. So the question is, are you innovating your energy requirements, hydrogen, solar? Can you give us a little bit more detail about that?
Yeah, we're looking at that. The biggest user of our energy are the grinding mills that are used to grind the ore or the rock into fine particles. They're the biggest consumer of energy. So if we can convert, and Australia has a lot of sunshine. We have a lot of land around our properties, so clearly solar energy and alternate renewable source of energy are things that we're looking at. We are focused on our bigger and longest life assets, so an asset like coal is an area that we are really investigating hard what can we do to change those emissions? And we think we have some really good ideas. Red Lake gets 70% of its energy from hydro energy already. But that footprint, we do see a clear pathway to reducing our energy footprint.
I have one final question for you, Jake, for today. We have some investors that are new to investing listening in. Yeah. And for investors that are new to gold equities and they're looking at gold mining companies, what is your advice or what in terms of what they should be looking for? How would they evaluate these companies?
Vanessa, I'm allowed to say something other than they should just invest in the VanEck GDX or GDXJ index.
A diversified portfolio, I would agree, but...
So I think, what we would say is look for companies with a track record of profitability. We've paid 16 consecutive dividends. Look for companies that really manage their business like no other business. Gold company executives do a lot of arm waving about the prospective nature of this new opportunity which they have. But fundamentally, our job at a place like Evolution is to take the gold out of the ground safely and profitably and convert that gold in the ground to cash in the bank, and then to decide how to use that cash in the bank, either to invest in to acquire things. As I said, the best thing we could do is discover things. Or if we can't do that where it's going to add value, give it back to your shareholders. That's what investors should look at. Companies that really treat their money as I'm using their money.
Well, thank you so much, Jake. Really appreciate learning more about Evolution Mining. Really appreciate learning all of your insights as well. So thank you so much for joining us today.
Thank you. Thanks for having me.
And thank you to everyone listening and joining us today, to you as well. If you are interested in investing in Evolution Mining, you can invest through our gold mining ETF with ASX GDX, which offers you a portfolio of companies in the gold mining industry. So thank you again. If you are interested in this Visionaries and Innovators series and learning more about what's coming up in terms of our other events, please follow us on your favourite social platform. We are on Facebook, Twitter, and LinkedIn. We are also on YouTube, which is where we will be posting a recording of this session today, should you wish to go back and rewatch it. So thank you very much again. We hope to see you next time and have a great rest of the day.